So you've got yourself some deposit, you know what sort of house you want, you know you can afford it, but you've got some bad credit holding you back. If that's you, then you need to listen up. Hey everyone, my name is Adam. Welcome back to the channel. I'm an expert mortgage broker, and today we are talking about credit. Bad credit, adverse credit, call it what you like. We're going to delve into what you need to do about it and how to make it better. So let's start with this mythical thing known as a credit score. What's a credit score, I hear you ask? Well, you've probably heard the term credit score. It's a centrally held database, I suppose, if you want to call it that, a database of your payment history for all of the credits and the loans and the credit cards and things that you've had. Now, if you've ever had a credit card, a loan, personal loan, secured loan, mortgage, gas, electric, mobile phone, even some car insurance and things like that where you pay monthly, that will all be on your credit score. Bank account as well. So all of that is held on your credit score for all to see. So banks and building societies, when they check if they're going to lend you some money, they're going to check your credit score. And that holds a record of how well you have been paying your debts in the past. So if you've missed some payments or been late paying things, it will be on your credit score for any new bank or building society to see. Now there's three big credit score organisations that you'll probably have heard of: Equifax, Experian and TransUnion. TransUnion's newer, the other two are probably more well known, but between them they're the big three. So they're the ones that keep a record of all of your financial information. So they're going to record on there everything that you owe and how you pay it off. So let's look at the types of credit issues that we come across most often. So we range from little things like missed or late payments. So if you've been a bit late paying your credit card or you've missed a loan payment maybe, that'll be recorded on there on your credit score. Now when you look at your credit score, you'll see all the different loans and things that you have, and basically you're looking at a page of numbers a lot of the time. Now if your credit score is nice and squeaky clean, there'll be zeros, so all the way through it will be 0, 0, 0, 0, and that means everything's up to date. If you've got ones or twos or threes or 4, 5, 6, 7, 8, and it goes up to 8 normally, that is how many months behind you are. So if you look back in the history and it goes 1, 2, 3, 4, 5, that means you've missed 5 months payments on a loan or credit card or something like that. Now, having 1 or 2 missed payments in the past is not going to cause you any major issues unless it's in the last few months. If you've missed things in the last few months and then you try and apply for a mortgage, that's going to cause you some issues. And we've had a few cases like that lately where we've had to go to some more specialist lenders for silly things, silly loans and credit cards and things, just accidentally forgot to pay that month. If that's recent, that's going to have quite an effect. If it's a year ago, 2 years ago, then it's not really going to matter. So missed and late payments, if they're a few years old, it doesn't really matter that much. Now from there though, things start to get a little bit more serious. So once you've missed a few payments, and I'm talking probably 8 maybe, you're going to get what we call a default. So a default is a marker on your credit score which says this person did not pay back this loan or this credit card or whatever it is. This person did not pay it back. So any new lender that comes in thinking, shall I lend these people some money or not, will see, well, you had a loan from such and such a bank and you didn't pay it back. That's going to affect their decision whether they're going to want to lend you some more money or not. Now, if your default is unsatisfied, so that means you haven't paid it off at all. So you can have a default and it then be satisfied, which means they didn't pay it back, but then after a little while we came to an arrangement and we did pay it back. So eventually it's paid off. Now, if it's paid off, it puts you in a better position for lenders. If you didn't pay it off, there are still some lenders we can go to, but it does reduce the amount of choice. Now with a default, it's all about when it was first registered. So when did that company first say you haven't paid this loan back? there's a magic number when it comes to credit score, which I'll talk about in a minute, but there's a magic amount of years that we need to wait. Now, this is the same principle for what we call a CCJ, a county court judgment. Now, county court judgment is a little bit different. That's someone that actually takes you to court. You might not actually have to go to a court, but they take you to court and they say, Your Honour, this person didn't pay us this money, and then the court give you a county court judgment. Now again, that can either be settled or unsettled. Lenders don't like county court judgments, so it shows that you have had a debt and just not paid it back. Now that could be for a silly thing like a parking ticket. I've seen CCJs before for parking tickets and things like that, but we've also seen CCJs for loans and credit cards and things as well. So some lenders might give you a default, sometimes you might get a CCJ. They're both not ideal, I have to admit, they're not ideal, but there is hope. Don't panic. There's usually a lender for most things. So most things that we're going to talk about today, there is usually a lender that we can go to. However, it sometimes comes down to your deposit. If you've got 5% deposit, because I've talked on some other videos about only needing 5% deposit, if you have only got 5% deposit, having CCJs and defaults and things is not going to be ideal. It's going to be really, really hard to get a mortgage. It comes down to your individual situation, but it's going to be hard to get a mortgage. So sometimes we're going to need a little bit more deposit. 10% is much better, 15% is great. 10%, there's more choice of lenders. So either way, with any of these things, we tend to need to go, what we say, off the high street to some slightly specialist lenders. Lenders that deal with this sort of thing all the time. Lenders that maybe don't look at your credit score, so the number on your credit file. You have a credit score made up of all sorts of different parameters. If you've had missed and late payments and things, your score will be low. So there are lenders we can go to that don't look at your score, they just look at the conduct. And if it's silly little things in the past, that's probably going to be okay. If it's more serious defaults and CCJs, that could still be okay. We have plenty of cases go through where we have adverse credit, CCJs, defaults, settled or unsettled. We have plenty of cases go like that all the time. But you have to be prepared to pay for it. Now, when we go to these more specialist lenders, they will give you a mortgage, but it's going to be at a higher rate. So your monthly payments are going to be higher than if we could go to Santander or someone like that on the high street and get a normal high street lender rate. Now, I said a minute ago that there's a magic number when it comes to time. 6 years. 6 years. Your credit score will last for 6 years. So if you have a default 5.5 years ago, in 6 months' time, that will be wiped off your credit score and no one will see it. So time heals all wounds when it comes to your credit score. So in fact, the next video I'm going to make is going to delve a little bit deeper into exactly the different types of adverse credit you can have and what we can do about it. This is just a general overview for now, but time will heal all wounds. So the longer it goes on, the more things get forgotten about. When it comes to a default, it's the time at which it was registered. So the time it was registered, not the time it's paid off. So if you have a default and it takes a few years to get it paid off, it's when it's registered that's the key. So actually, if it takes you 5 years to get it paid off, well, in a year's time, it'll be gone and forgotten about. So that can be quite comforting for a lot of people with some adverse credit, that in 6 years' time, it'll all be gone. So after defaults and CCJs, we go to the next level up, and that's things like IVAs. So if you heard an IVA or a debt management plan as well, they're kind of like top tier adverse credit. Now there are lenders that will support you if you're in or have recently been in one of those situations. We're gonna need more than 5% deposit though, that's not gonna be enough. So it does make it quite tricky for a lot of people. You know, the whole point with these things probably is that you haven't got loads of money spare, and so then we need a bigger deposit. So I'm not going to lie, it is quite tricky in these kind of situations to get the kind of mortgage you want, but it's not completely out of the question. Okay, so we just said that time is the key factor for improving your credit score. There's a few other things that we can do to try and help you bring your credit score back up once you've had some problems. So the first is, sounds a bit weird actually, but it's make sure you're on the voters roll. So if you're on the voters roll, the lenders can see you at your address, they know you live there. It just helps build up your score. The second is by actually taking a little bit of debt. So I normally encourage people to take a credit card. Now it doesn't matter who it's with, it doesn't matter what rate it is, because you're never going to pay any interest on it. What I'm going to tell you to do is take a credit card, any credit card that you can get, and just put a little bit of money on it each month. You know, put a tank of fuel or a supermarket shop on it each month, and then pay it straight back off. And that shows that you can get some debt in the first place, and you can manage it and you can repay it. Now, very important here, you must set up a direct debit to pay at least the minimum payment each month, preferably the whole thing off, but you must set up a direct debit. You must not miss a payment on your credit card, because then that wipes out all the good work we've done. So take a credit card, just use it a little bit. I'm not encouraging you to go and spend loads of money on a credit card. We use it a little bit, and we just put a little bit on each month and we pay it straight back off. That's a really good way of quickly building up your credit score. So by the time you've done that, you've made sure you're on the electoral roll, you've made sure that your bank account, you stay above your overdraft limit, and that everything else just runs okay. I'd say in about 6 months you should notice an increase in your score, and you'll probably look a lot more appealing to a lot more lenders. Now the next video I'm going to do is going to be a lot more specific around the different types of bad credit we can have and our options for different lenders. So you know what to do, subscribe to the channel, you won't miss it. Look out for that in a week or so's time. For now, if you would like to know how your situation is going to affect your mortgage, go and get your credit score. I'll put a link in the description below to a free credit score resource that you can choose to go and get your credit score from, and download that. And then that'll help us decide which lenders are going to be best for you and if there's a chance of you getting a mortgage. So if you want to do that, go and get your credit score, send it in to us, give us a call. You can book an appointment in the link below, or on our website there's a link below for that as well. So go and get your credit score, see what it's like, let us know, give us a shout, and I will see you on the next video. Take care.